after I graduated from IIT Kanpur, I was, I think, one of the most disoriented people. I think about 10 years ago, if I said, let's do a quant investing strategy, people would say, what are you talking about, right? Or somebody would say, this doesn't work in India. I think the power of quant comes together once you have this big data set, right, and very good data set. In the Indian market, I think the market breadth is expanding. There's so many new companies coming into the market, and differentiated sectors are doing well. A lot of the retail investors who come in, unfortunately, come in during the bull market. So they tend to get discouraged by any small corrections.
Hi everyone, welcome to episode 3 of the Women in Finance podcast, and today we have the pleasure of speaking with Sonam Srivastava, the founder and CEO of Wright Research. Sonam is considered as the trailblazer of quant investing in India, and with Wright Research they're revolutionizing wealth management in India with their cutting edge quant finance techniques. So thank you so much Sonam for being with us today.
Thanks a lot for having me.
So before we dive in and talk about all your accomplishments and what you've done with Wright Research, I just wanted to understand, how has your childhood been and how has that shaped who you are as a person today?
Definitely, I think my childhood has had a lot of influence on what I do. I grew up in a family of 3 sisters out there in Uttar Pradesh. We lived all over the place because my dad is an electrical engineer. And I think from the childhood, my family has had a huge, focus on studying maths, and a lot of people in my family are engineers, lawyers, and they sort of have that focus. So that has influenced me. I think even growing up, I did most of my schooling from a school in Varanasi, where I think very early on we adapted to learning about computers, programming, and all that, which gave me that passion to start with, and which is why I think I have taken up this field where I do quant and where I do maths along with financial knowledge and all that. So I think a lot of influence from there.
From your family.
Yeah.
Lovely. And you have a background of chemical engineering. You're a graduate from IIT Kanpur. And from that to quant investing, how did you land up here?
So it's been a very interesting journey for me. After I graduated from IIT Kanpur, I was, I think, one of the most disoriented people after I graduated from college. I didn't know what my passion was. I did work in Reliance for a year. I sort of understood that I didn't want to do chemical engineering. At that point in time, back in 2010, you would see a lot of tech startups coming up and all that. I had already done a lot of work on data science and machine learning in college, so I thought that would interest me. So switching from chemical to tech, I understood that tech also is not something that I'm really passionate about. Then I started studying for CFA. I got my first job with Forefront Capital, which was a startup started by Radhika Gupta and Murlis, and that is where I sort of really things started clicking for me. I knew that my passion for working with data along with the immediate reward that you get by working on financial algorithms, that was something that was really interesting for me. And since then, I've been working on that. It's been more than 12 years.
That's lovely. And what made you, what inspired you to start Wright Research, and what was your vision when you founded the firm?
See, I'll tell you very honestly, I've always been an entrepreneurial person. I have always sort of liked to build things and be passionate about doing things end to end and building interesting stuff with what I do. But yeah, obviously I was working in this corporate job where I was happy, where I was quite well settled, and 2018 was a trigger for me in my career where I saw my team where I was working with HSBC that shut down. Then I joined a startup called QPlum, which was US-based robo advisory. They also shut down.
Okay.
And at that point in time, I thought that I'm not going to look for a job anymore. I'm confident in what I do, and I accepted.
And since 2019, there has been a significant shift, in data-driven investing. Can you explain why that shift happened, and how did you, recognize that shift, and what do you think is the future of data-driven investing?
See, for me, I think this is what I love to do, right? So even if I can recall myself 10 years ago, I was still playing with these algorithms and playing with data. So I think that's what I love to do. But yeah, things have changed, right? So if you think about 10 years ago, if I said, let's do a quant investing strategy, people would say, what are you talking about, right? Or somebody would say, this doesn't work in India, right? Those type of statements you would get. But, cut to 2019 and 20 when, I think the trigger was that people started seeing the potential of momentum investing strategy, right? People saw momentum, which is a quant strategy, do extremely well. And I think that's worked for us, that's worked for the quant mutual fund, and everybody's done well, right?
Yeah.
And now everybody, and I think now with the growth of AI, with the growth of tech using, people want tech to be there in the investing process also.
Yeah. Yeah, I remember because I was interning at a mutual fund back in 2019 and everyone was kind of talking about, quant investing and they were launching a quant fund.
Mhm.
So I completely, understand. And, what is the vision for Wright Research? Personally also for you, and what are the company objectives also?
See, I think Wright Research has been built with a lot of passion, right? We enjoy what we do and we want to be very honest to the process, make sure that we are giving the best service to our clients in terms of strategies, in terms of research and everything else we do. We want to work on more interesting products, scale this up. So as like any investment manager, we want to scale up and get more people in. But doing that, we want to be very honest with our philosophy, make sure that we are doing some standout research, right, which showcases the power of quant investing in the Indian market.
Yeah. And you were talking about momentum investing. How can you elaborate for our viewers, what momentum investing is and how has it contributed to Wright Research's success?
Right, so momentum investing, I think, has been one big driver of our success. So momentum investing is very counterintuitive to what you hear from analysts and all these experts. So people will come and tell you that investing based on fundamentals, investing based on the company's valuation is what you should be doing. But momentum investing says that let's just buy anything that's going up, let's try to ride that trend, and which seems strange. But if you think about the market is actually driven by a number of investors, and this supply and demand. And the price would only rise when there's a lot of demand, right? It's not, even if the valuation changes, there's no demand, if people are not buying, the price is not going to change. Momentum investing is a type of investing strategy that tends to find out that growth in demand, where is the demand building up, and that's what they sort of try to participate. So it's more like based on market behavior instead of value, and I think we've seen it work really well in India. Even before I started Wright Research, I literally published a paper on how powerful momentum investing is in India. And we launched our momentum strategy in 2020, which led to a lot of growth for us. And even right now, a lot of people come to us because they know that we do momentum really well.
Yeah. And I also, read your LinkedIn just a couple of hours ago that it's been 1 year for Wright Research's PMS, and you guys have crossed about 250 crores in AUM. So congratulations on that. And so, how did you guys transition from focusing on advising advising investors in the stock market to actually managing their capital? What was the transition like?
See, I think it's been a very interesting journey. See, I have always worked in institutions, right, like institutional equities for Edelweiss and HSBC Quant. I always had that view that we'll be managing a PMS or something like that. But when I started in 2019, 8 months later, COVID crisis hit and nobody was able to, I couldn't set up a PMS or nobody was looking at new managers. But yeah, something changed in the market with this whole growth of retail investing started, right? So things that we were doing on the advisory side really blew up, right? We were seeing thousands to thousands investors come in, so our focus sort of shifted towards there. I think we did that for 4 years, and I think after things stabilized, after we actually were able to raise capital for the company, we set up our PMS, and it was a new thing for us as a company because we were dealing with digital audience, we were not talking to people, we were managing small ticket sizes, and transitioning to PMS was something that we would not have believed a year ago that we would do 20 crores, and it's been we've been getting very good response from our investors who really believe that this type of investing strategy can make a difference in their journey. They recognize the power of quant, they understand our philosophy. So when we talk about quant, we are not saying that it's a black box, it's a magic box that will do something. We try to explain it to them very transparently.
Yeah.
The multiple factors, how we're allocating to them, and why we're expecting what we're expecting. People appreciate that, it clicks for them, and people come in, and we've done good performance also.
Yeah.
So I think it's been a very interesting journey, and I hope the markets be in our favor.
Yeah, and also I feel like because you know what, riding that kind of wave with quant industries and kind of brought it to India and were at the forefront of it. I mean, education and advising and educating your retail investors must have been very, very important for you guys, correct?
Yes.
So how do you do that? Because I'm sure half of your time is probably just spent on making people understand that this works and data-driven investing works.
Right, no, I think it's been a whole journey. See, obviously, I had a lot of experience working in quant before I started. So I could explain things, but then you have had to find that because people who don't know quant, you have to explain it in a way that they understand, right? So we've had, and obviously social media and everything has grown since then. People, at least in the financial world, the growth of social media, YouTube, and all that has started since the last 5 years. So we've got a lot of opportunities to talk about things in different forums, in different languages. When I started 5 years ago, I would just talk in jargon. Now I'm able to explain things much more clearly to people. I think that's what they appreciate, right?
Yeah, I mean, people are much more open to alternate investments in terms of not just traditional investments. So I think that curve is also.
No, definitely. I think the market growing also as a factor, right?
Yeah.
This market breadth is increasing.
So in quantitative investing, how do you balance intuitive investing versus computation, and what are some of the challenges you face in quant investing?
That's a very good question, right? See, let's say you are building a strategy based on a single factor, right? For example, you're just doing momentum investing. Then, let's say the market shifts, you are going to miss out on, undervalued companies or companies that are doing a turnaround because momentum is not going to pick that up, right? So if you're only looking at one set of data, then you will not have the whole flavor. So what we try to do is we're looking at price data, but we're also looking at fundamentals and evaluating value strategies, growth strategies, quality strategies, and all whole set of them. We're looking at estimates, how they come for the market, and how our analyst rating is working.
Yeah.
I'm playing around right now with sentiments data. It's super interesting how our sentiments changing or events in the market that you can get from the news. So if you, I think the power of quant comes together once you have this big data set, right? A very good data set.
Yeah.
So I think if you have that, then you start picking up. For example, when I'm looking at estimates, that actually brings in the flavor of forward-looking projections, right? So we are able to pick up tailwinds through that. When we're looking at sentiment, that gives us the flavor of what's happening and makes us react quickly to risk events. But not to say that we've covered everything. There's so much more to explore, and market would change every once in a while, and you won't know what it hit you. So, for example, when the rate hike started, we sort of were not factoring that in, right? That was not a factor, so we had to do our analysis and include that. Now, when the rate cuts will happen, you will have to, look at that factor. So, obviously, the market will keep on changing, and we'll have to evolve.
And looking ahead, what kind of trends do you anticipate in the stock market? What should your investors and people in general should be aware about?
So I think we are at a great place in the Indian market. I think the market breadth is expanding. There's so many new companies coming into the market, and differentiated sectors are doing well in India and emerging. I think, so we do expect the trends to be strong. With the rate cuts happening, there will be more liquidity in the market, which will be good. Obviously, we believe that valuations are important. So there are certain segments where you're seeing very frothy valuations.
Yeah.
And already many of our strategies have moved out of those segments. We are focusing on slightly undervalued names, more differentiated segments, incredible consumption, chemicals, agriculture, etc. Right? So I think the flavors are changing. And I think the beauty of the Indian market is that it has a lot of opportunities and things change with time. So you have to be adaptable, you have to be quantitative in how you approach it, and that's where you can be more consistent, right?
Right. And what impact do you think AI will have on the future of investing, and how is Wright Research using that AI ML in your techniques and strategies?
So I think AI is going to be a big impact everywhere. It's a very powerful tool. So even when I said that we're looking at sentiment, right, you can literally take any news article, give it to an LLM, and ask it what are the key takeaways, what are the key events, what is the sentiment, and use that in analysis. So those type of things will be very powerful to do. So we are very, very bullish on that aspect. Apart from it, I think if you how you build a portfolio or how the portfolio is constructed or risk is managed, I think maybe an LLM is not going to do that job, right? We still see investing has always been a heavy data-driven process, right? So we always use a lot of data and a lot of algorithms. So everything that we do is driven by algorithms, which might not be purely AI,
Yeah.
but they are sophisticated data-driven algorithms. We use some predictive elements in some aspects of it, but what's very critical in investing is that you don't have a scope to go wrong, right? Your chat GPT can sometimes go wrong and
Yeah.
give you wrong answer, but imagine you're investing real money for somebody else using that. So you have to be very, very tightly and very accurate about your prediction,
Yeah.
and very, very sure about what you're doing. So I think that's where it's tricky. So we use AI in some aspects of it where it's makes sense,
Yeah.
but it's not like a pure AI.
And moving on, what do you think is one of the biggest mistakes you see retail investors making in
Yeah.
terms of investing in quant funds or quant strategies?
See, I think a lot of the retail investors who come in, unfortunately, have come in during the bull market. So they tend to get discouraged by any small corrections. We see that when the market is giving you 10% returns every month, they think that's what's going to happen every month. And the moment that stops, they get discouraged. So I think when they haven't seen, they don't have that philosophy that things can go wrong, but the market recovers and you have to stick around for the long term. So I think that is something that people need to learn. I also believe that financial education is very limited in India.
Yeah.
There's a lot of interesting teams and startups. They're doing very good job, but we need to do much more. And people should be much more educated
Yeah.
about the opportunities out there, because many of them don't even know what's out there, right?
Yeah. And what advice would you give to someone who just is entering, has made some amount of money and wants to invest in particular in quant investing and wants to do quant investing? So what would your advice be to them?
See, I would tell them that first thing, I think there's a misconception that some people have is that quant is something new
Yeah.
and it's going to blow up my money. See, that's not the case. It's a highly diversified basket that people create. You would typically see that the risk in a quant strategy ends up being lower than the market. So it's a quite a safe strategy, maybe more low risk compared to some of the traditional investors. And so you have to recognize that and look at it as a very good opportunity for you to grow your wealth. I think, and as a new investors, right, I think educating yourself about what's out there is important, why it works, right? When I'm saying quant investing, why does it work? What does momentum mean and why it would work for you? What do these different factors mean and why that would work for you? What does risk in the market mean? Right? Risk is not just a number, it means that your portfolio would correct by a little bit and then it would recover. So educating yourself and what is the power of long-term investing, I think that's important.
Also, I have this question for someone who wants to make a career in either finance or quantitative finance. What would your advice be to them? What do you think are very, very necessary skill sets? And what are some non-negotiables you look for when you hire people?
See, financial services, if I just talk about finance, the first thing is that you have to have understanding of what's out there, right? So learning the basics, what do markets mean, what are the type of instrument, what the valuation in the basic terms, that type of work. If somebody knows that, then it's an easy hire for us.
Yeah.
So understanding that is important. Doing internships at different places where you can learn, that's important. When talking about quant finance, we also look at programming, data, skills because that is something needed.
Yeah.
And that's a differentiated skill set that
Yeah.
people can build through different courses or experimenting on their own. So, a mix of this. So, for us, these are what is important. And when we are hiring, I think looking at people, we are a startup, we are a small company, so how passionate they are about the mission,
Yeah.
right? How aligned they are towards that. Secondly, I think in terms of compliance and ethics, you have to be very strict. So, how closely they will stick to that, I think that's also very important, right?
Yeah. So before we wrap up, I'd like to ask you some fun questions, like a quick rapid fire. So, what is one book that has really, influenced your life or career?
See, I like this book, The Man Who Solved the Market, Jim Simons, very pertinent to our discussion.
Yeah.
It's about Jim Simons' story on how he built and stuff. So that's really insightful. Related a lot to it.
Yeah. And is he one of, I think you mentioned somewhere that you look up to him.
Yeah.
Yeah. And any other, role models in the industry?
See, lots of role models, in fact, and so I look up to Jim Simons, I look to other researchers who've done a lot of maths and finance, right? Who've done well in that sense. People in India also, people who've done a really good job in investing, for example, the Parag Parikh story, things like that. Even I get to meet a lot of people who are doing a lot of great work in financial education. I'm really impressed by that.
And if you could have dinner with any, famous personality, dead or alive, who would it be and why?
So I think I would love to have dinner with Jim Simons only, right? Yeah. Because his story is not told by him, it's somebody's written about.
Yeah.
Or I would love to have dinner with Elon Musk.
That's very interesting.
Yeah.
You're also very active on Twitter.
Yeah, I also follow. I read his book also. I was
Okay.
very influenced by it, but I don't know how true that is.
Hmm.
It's a controversial thing.
Very.
But yeah, very interesting.
Okay.
Yeah.
And what's a fun fact about you that many people may not know?
So a fun fact about me is that I love to, I'm very athletic as a person. I used to run a lot when I was in college. I used to lead my college team. Still run a lot. I like to go swimming. So yeah, I think I enjoy that.
Okay. And if you weren't in finance, what other career would you pursue?
If I wasn't in finance,
Wasn't in
if
finance.
I wasn't in finance, see, I would for sure be, I would probably be like a researcher,
Okay.
right? Some sort of a PhD.
So with data only.
Data, I would be doing something because I used to be a very studious person in college. Probably I would do that. Or I would be, I was thinking about it, I would be curating coffee or doing something like that. Yeah.
And do you like to travel?
I do. I don't, actually, I haven't traveled that much, but I do love to travel.
Okay. And what are some of your hobbies that you're passionate about? I know you like to read.
Yeah, I like to read a lot. I enjoy all sorts of books.
So fiction, non-fiction.
Fiction, non-fiction, all of it. I love swimming, so that's something I really like. I like to go running. I like to draw also.
Okay.
Right? I like to hang out with my sister's children. Yeah.
What is one piece of advice that you would give your younger self? Or before all of this started?
See, I would tell my younger self to, be more explorative because I remember when I started, I would not know what's out there and struggle to find, my calling. So getting more educated on what's out there and becoming more confident in pursuing what you like from the get-go. I think that's what I would tell my younger self.
Lovely. Thank you so much, Sonam, for being with us today. It was lovely chatting with you, and really looking forward to what's in store for Wright Research in the future. So thank you.
Thanks a lot for having me.
A huge thank you for watching today's episode and joining us today on episode 3 of the Women in Finance podcast. We hope you found Sonam's journey and insights as inspiring and valuable as we did. Don't forget to subscribe to our channel so you never miss a story from these inspiring leaders.